Invigor Book and Buy ends November 14th. Run, don't walk to invigorbookandbuy.ca to find out how to get $30 off per bag. Terms and conditions apply. Welcome to the Real Agri-Studies podcast, the show where farmer voices meet the power of data. Here we break down the latest research from producers, dig into the trends shaping agriculture, and turn insights into action. Now here are your hosts, Sean Haney and Justin Funk.
Sean Haney and Justin Funk here to talk to you about the October results of the Canadian Farmer Sentiment Index that RealAgristudies does with the RealAgristudies Insights panel. I want to thank everybody that turned out, showed up to answer this month's survey. Some really valuable information. We're going to get an idea on how farmers are feeling about their current and future farm financial performance and a whole bunch of other things. What are they optimistic about? What are they concerned about? That and a whole lot more. So, Justin, let's dig into it and see what farmers are saying.
Yeah, you bet. So we had 547 farmers complete this intake, which was done towards the last couple weeks of October. So we're very thankful for people's participation, especially during busy time of year for sure. For those of you who this might be your first time experiencing the CFSI, this study, we do it the same way every quarter, where we're attempting to measure farmers' attitudes and opinions related to things like their current and future farms' financial performance, outlook on the ag industry and the economy, willingness to make investments, confidence in marketing and the outlook on those markets, and state of mental health. And what we do is we ask questions that are designed to measure either a positive response, so better off, in this case, a negative response, which would be worse off, or in some of the questions, we have a neutral response, which would be about the same. So in looking at this question, would you say that your operation is better off, worse off, or about the same compared to a year ago? We would take the one number and subtract it from the other to get a differential at 100. And then that gives us this index, in this case, of negative 64. Now, that negative number is going to be relative to this next chart where we show you that 100 is what we call the neutral line. So anything that falls above this line would be positive sentiment. Anything that falls below this line would be negative sentiment. So, Sean, are you ready to walk through the results of October 2025?
Yeah, there's a lot happening in the world of agriculture right now, whether it's livestock or cropping. So I'm looking forward to seeing how farmers answer the questions.
Yeah, you bet. So, let's start with the current farm financial performance. Looking back a year ago, you can kind of see how this number has pretty much remained relatively stable around that, 62 to 64 with the one blip, which was in January of 25. We're right at that 64 mark again for October of 25. So pretty much this number has not really fluctuated a whole lot.
Now, Justin, it's relative to 12 months ago, right? So this is really showing that how farmers feel about their current farm profitability continues to slide to the downward, because we're over a year now where we feel worse than we did 12 months ago. So we are a lot worse than we were 24 months ago.
Yeah. In fact, if you take this back to when we started doing this study back in September 22, we started with some positive numbers, but then things really started to gradually decline over that period of time. So this seems to be where we settled. Now, looking ahead, we also asked the question, how do you expect your farm's financial performance to look 12 months from now? Better off, worse off, or about the same? And so using the same principle there, you see that we have been in the negatives on this downward trend, and we pretty much are exactly where we were at a quarter ago, but you can see the overall trend has been trending downward. Now, but before we talk about this, another question that we started to introduce into the study after these two questions was, how would you rate the financial health of your farm as being excellent, good, fair, or poor? And just to show you, to the point that you were making earlier, in July, 57% of farmers said that their farm's financial situation was in either good or excellent shape. Now it's at 45%. So, I do think that there's a cause for concern here.
Yeah, and I guess one thing is, I'm not sure it's a positive, but they're confirming data points is what I'm trying to say, is the fact that this makes sense. right? These three pieces of data, 64 on the current farm financial performance, 71 on the future, and the fact that 45% of farmers indicate their financial situation is good to excellent, which has been sliding downwards here in 2025, the three times we've asked it, that all matches. And it makes sense what we're hearing outside in the real world when we talk about some of these things for sure.
The next set of questions focus more externally to what's going on in the market. So, optimism towards the Canadian ag economy, which is a 12-month outlook, where we have seen the number starting at 62 a year ago, dropping way down to 36 in January, and slowly, very slowly, creeping its way back up. Um, in looking at the future of the Canadian ag industry, this is more the 5-year outlook. Are we going to have widespread good times or widespread bad times? You can see that this number has been trending downwards, hasn't changed a whole lot here, but you can, I guess, point to a slight increase from July of 25, but not a tremendous amount.
Yeah, if we look at 12 months out, optimism's at 46, 60 months out or 5 years is 65. The way we're seeing incremental increases on that 12-month number by, I don't know, 2045 will be positive. I don't know. We're really slowly going higher there, but this is, and again, on all of these, and we're going to get into this, the differences on farm type in the future in the coming weeks here as we talk about some of these numbers. Definitely a difference between how row crop or broadacre farmers feel about the market versus, say, beef farmers feel about the market currently, but this is the aggregate.
Now, the next question focuses on confidence or willingness to make farm investments. Is now a good time or a bad time to be making investments in things like land, machinery, equipment? And you can see that this number has also had a little bit of variability to it. A slight increase, but I mean, for the all intents and purposes, we're sort of around that, 55 to 60 mark. Very little change, despite the fact that we have seen, some fluctuation in interest rates. I think in a positive direction for those making those investments anyway, but not really a whole lot of change over the last 4 quarters that we've done this.
Yeah, like you mentioned, the key here is from a financing standpoint, interest rates have come down. The Bank of Canada did lower rates last week, and it kind of sounded like they're maybe on pause now. There is concern about the Canadian economy, and so they're maybe pausing here, and so that we've removed one of those as a barrier, and we're really not. It hasn't jumped us to the upside here at all in comparison to the US, where the Fed is just kind of maybe just getting started on some of their interest rates cuts. We've seen also, this is right now may not be a good time to make farm investments, but farmers are still investing, right? We see this with machinery sales here in 2025 in Canada. They have been flat to last year. We've also seen land prices, although accelerating at a decelerated rate compared to past periods, we are still moving higher when it comes to the Canadian farmland value market. So, not really surprised here because I don't think we see this. I'm curious what has to happen for us to feel like now's a really good time to spend money on capital, right? I think it would definitely be a much different economic time in agriculture than we're seeing right here today.
In the same survey, this intake, we asked a question on where are you looking at cutting costs, and cutting costs on machinery was one of those items. We'll get to that in a little bit. The next two questions focus on the market. So confidence in one's ability to market, and then the other is their anticipation of what's going to happen with the market. So is now a good time to be selling crops or holding crops because of what's happening with prices? Here you can see that we have been in negative territory for the confidence in marketing crops. We sort of bounced back up to where we were a year ago within a margin of error. But I think a lot of that confidence is going to be related to what's actually happening with the markets themselves. And you can see here that there has, and this is the only area that we have where there is some degree of positive sentiment. and that is on the outlook here on selling crops. And in this intake, we see this number jumped up significantly, highest it's been in a really long time, up to a 135. So that's a very positive outlook right there.
Yeah, it doesn't match, again, what when we see a 135 in terms of outlook on selling crops, which means farmers feel that prices are going to be higher in the future than they are here today, because that's the incentive to hold. That does not, probably some people are like, wait a minute here. Then why are farmers so negative in their current farm financial performance and especially their future farm financial performance? We're at 71. Those things don't match. Well, we're going to talk about some of the concerns, and one of the concerns that I continue to hear about from the Real Agriculture audience is the cost of inputs as a main example. Input prices have been very sticky. They have not pulled down, and they haven't reconciled to where the commodity markets have been. And I think for a lot of, let's just pick on a commodity, canola, for example, or peas. There's a lot of tariffs that are out in the market. So a lot of farmers right now, if they can cash flow it, that's an important criteria. If I can cash flow it, they're inclined to hold, put crop in storage, and wait to see what happens out into the future. Months, hopefully not years. I think years is doubtful from a cash flow perspective and just a reality. But that's what's happening here. And I think what's boosting this number higher is that farmers are inclined to hold because they feel that they want to see a reduced tariff environment going forward. That's going to allow for better prices for them at the farm gate.
The last question is on state of mental health. Is your mental health in a better position, worse position, or about the same as a year ago? And this number too has moved a little bit over the course of the year. We're exactly where we were 3 months ago. So at a 93, it is still in negative territory, but it's not nearly as negative as some of these others. It's hovering around that neutral line. And we also asked this question too, as sort of to serve as a benchmark, is how would you actually assess your state of mental health today? Is it excellent, good, fair, or poor? And 71% of farmers, and this is down a little bit from the last survey that we did, but indicate that their mental health is either good or excellent. So that's encouraging there.
Yeah, very encouraging. Definitely a positive for sure.
So that wraps up the Canadian Farmer Sentiment Index questions. In this survey, we also asked some questions related to areas of optimism and concern, as well as cost-cutting measures. So let's take a quick look at what we learned there. So a year ago, we asked these exact same questions the exact same way. So what I'm going to do is I'm going to demonstrate how the numbers align with what the responses were 12 months ago. So let's start with the areas of concern. What we did is we presented our panelists with a series of, I guess what you would call things that you could be concerned about, like commodity prices, input prices, and weather. And going back to October of 24, so this is a year ago, you can see, very clearly here that the top concerns were commodity prices and input prices, and then weather, and then you see how everything else sort of played out. Keep in mind that this was October of 24. This was prior to the election in the United States and any talk of tariffs, which is why the market access and trade issues, probably was a little lower than one might expect. Now that we look at where we stand today in October of 24, you can see that for the most part, the numbers really haven't changed all that much. But you can see that market access and trade issues has significantly increased, falling into people's top 3 concerns of 2025 and beyond.
Yeah. Okay, so a couple of things that come to mind right away here is makes sense that market access and trade has really bumped up from, say, 19% to 39%. That makes sense. I might say I thought it would be number 2. I thought we would see a drop in the concern about commodity prices, not because people aren't concerned about them, because I just hear a lot more about the input prices. And so I actually thought we actually saw a reduction here. Now, only by 3% from 67 to 64%. Okay. So like it's minute, but it was a decrease. I thought we would see an increase of input prices, market access move way to a higher number to the right-hand side, and we would see a further drop in terms of commodity prices. That is actually kind of fascinating to me. Otherwise, a lot of the stuff, kind of pretty much stayed the same. That those input prices right now, relative to the price of commodity prices, or where the market is, that's holding us back from turning the profitability story around. So I thought that would be a little bit higher. So
Yeah.
that is kind of interesting.
This chart doesn't really do it justice, but it is third. And that's something that we should point out. I've overlaid it based on the order that things were in
Yeah, yeah.
2024. So, it is in the majority of those top three for sure.
Farmers less concerned about the cost of land. And this is maybe get careful how we phrase this. Farmers were asked to pick the top three things they're concerned about.
Correct.
Okay. So we saw a reduction in, cost of land, an increase in concern about government regulation and policy changes. There's an increase there. Less concerned about, the number went down when it came to equipment prices. Weather stayed exactly the same. Less concerned about the cost of borrowing. That kind of makes sense, right? We've seen interest rates come down compared to 12 months ago. We're a little bit less concerned about the cost of labor,
Mhm.
and both decreased consumer demand and unfavorable long-term contracts or partnership is like here. I could argue that decreased consumer demand, if I was in the beef industry, that might be one of my big concerns. We're really testing how inelastic the demand is for beef right now. When you look at some of the prices that are out there, when we get into future weeks, we should look at how a beef producer answered that question versus maybe the rest. But that consumer demand, I think a lot of people think about that as a domestic answer versus like international answer on consumers. But that ties very closely to some of the trade issues. One of the reasons why China has been able to back off on some of its purchases, or India doing the same, because there's concern about the global demand for some of the commodities that they would be using those purchases for. So yeah, fascinating stuff. Really appreciate farmers. This gives a lot of clarity, a lot more clarity in terms of where farmers' minds are on the concern side. So appreciate everybody answering this question.
Yeah. So now you were talking about consumer demand. We also asked what were farmers optimistic about going into the next year. And in this case, you can see that increased consumer demand is one of those things. Now, this is the response from a year ago, okay, where you can see what farmers are most optimistic about: production efficiency and increased yields, cost of borrowing, technical advancements, etc. As we look at now October of 25, so a year later, very similar results, although there are some notable changes. So the cost of borrowing, you see, has dropped down to 25%. So it's in 25% of farmers put that in their top three. That's how we interpret it. We see production efficiency and increased yields has dropped down. What has increased is, from an optimistic standpoint, market access and trade issues, favorable long-term contracts or partnerships, and increased consumer demand. And then government regulation, although that number is pretty small to begin with, so that change isn't super significant. But there you go. That's the look at it here for areas of optimism.
Yeah, it's and you know what's kind of fascinating from a Western Canadian perspective. Last year, farmers were, they were optimistic of thinking, increase yields, and they did very much so. And the reason was Mother Nature cooperated very much so, right? So maybe that's why there's a bit of a back off there if we think about what's ahead for us in the 2026 crop year. It is interesting with all of the talk about trade and all, where are we going to ship all these commodities, and what do we do with the supply, and what are we going to do about all these tariffs? There's actually increased optimism today about market access and trade issues than there was a year ago. So we'll definitely have to dig deeper into that one and try to expose some of the why of that. But I think, how would you interpret the cost of borrowing? I'm less farmers are optimistic about the cost of borrowing because the rate cuts are we could be through all of them. Is that why?
So I think it's important to keep in mind that because you could only choose three of these,
Three. It just bounced out of the top three.
It just exactly. So, it's not like there is necessarily less optimism. It's just it's not in the top three areas to be optimistic relative to the other options that people have. And I think that can be said for any of these. So we're really just looking at the popularity of options, not the degree of optimism, if that
Yeah,
makes
yeah, yeah.
yeah.
Very fascinating.
No. So, the last area we're going to look at here is another one that we looked at back in October of 24, and recognizing, what we just looked at in this Canadian Farmer Sentiment Index questions, there are areas to be concerned about. There's financial pressure for sure. We wanted to get a sense as to, well, where are farmers looking at potentially cutting costs going into this next production year? And so this is a very noisy chart, but you can see the how we asked the question. So presenting these options, and then it was on a likeliness scale. So anything in the green there would be that there's pretty much some likelihood that this is going to be an area where cost will be cut. Now, this doesn't really give us a very clear look at it. So what we also do is we assign a weighting to each one of these answers, which allows us to calculate the mean and then demonstrate the means showing the significance of these. And so that's what I'm going to share with you here. And we can certainly go back to that other one, Sean, if we need to. But going back to October of 24, these were the means. So using the exact same scale as we used here in 25. And when we look at where we stand today, the order really hasn't changed a whole lot, but you can see, and I think this is what we need to pay attention to, is that the bars are a little bigger. And I think that suggests that there is a greater likelihood that costs will be cut in these respective areas, like reducing spending on equipment, which is something we talked about earlier with the making farm investments, the use of generic products, and the reduced use of some I guess you would call them value added or secondary type products like biologicals and foliars. So, going back to what we witnessed a year ago, some of the more permanent, I guess, reductions, selling land, reducing staff, or ones that might have a significant agronomic impact, like cutting chemical rates, reducing fertilizer use, still have increased a little, but still remain less popular options than some of the others.
Yeah, I was going to ask you about that staff reduction going from 2.03 to 2.31 and what you make of that change. How would you describe that change from a quantitative standpoint?
I would say that there is a group of farmers, and we haven't really dug into this, who are probably more likely to do this than others. It could be geographically based. It could be area of production. It could be based on farm size. It could be with respect to some of the advancements in technology that might lead to labor efficiencies. So I think there's a lot at play there. It couldn't narrow it down to just one. But like in Ontario, where I'm at, our shoot minimum wage minimum wage continues to increase. I don't really follow other labor markets, but that could also have something to do with it too, is that labor's just getting more expensive.
Yeah. It's a 15% change going from 2.03 to 2.31,
Yeah.
right? So that's just, yeah, that one kind of stuck out to me a little bit. What something to watch out for here is, as the chart here shows, a year ago, Canadian farmers gave a 3.86 average rating on reducing spending on equipment. And American farmers, from some of the data that we compared to, same sort of sentiment. The difference has been in 2025, the American farmer significantly cut back on spending of equipment based on some of the AEM numbers. We have not seen the Canadian farmer follow through with that. And this is some of the comparing and contrast I've done in a lot of presentations with audiences. Something to watch out for in 26 is, okay, do we see a matching of the action to the forecast in 26? Is that a bit of a change? So that's something we're going to watch very, very closely as next year progresses. Again, when you talk to a lot of farmers using more generic products, I think it depends on the application. So maybe using more generic products for a burn off, but maybe not necessarily in crop, or like the use we're asking this in very overarching senses, but I think there is still a component there of, maybe using branded products for some applications versus going generic across the board. And yeah, a lot of we're in kind of the same profitability situation we were a year ago on the cropping side. So this doesn't surprise me.
Yeah, really, when you look back at our numbers in the CFSI and frankly the areas of optimism and concern, my conclusion is there's just very little change that we have seen in how people are answering some of these questions, with a few anomalies like the market access question, which of course you would expect to see. So yeah, it's despite everything going on, the numbers seem to be relatively even over the course of the year.
Yep. Well, it's upon us to dig into in the coming weeks here where the differences are across farm type, across demographics, and look forward to definitely doing that with you, Justin. And we'd love the feedback from the panel. Like if you're watching this video and you're like, hey, I got a thought here, we'd love to hear from you. You can send me an email to shaney@realagriculture.com. Another way is you can get a hold of us on the Real Ag feedback line. You can text or call 855-776-6147. And again, really appreciate everybody that completed the survey. We've got more data to be released, including should Canada lift those EV tariffs on China? That was the leading question. We'll get to that in a future video indeed. Okay, Justin, thanks a lot. Appreciate it.
Thanks, Sean.
Cheers, everybody.